What's up, Main Street? This is Ryan Mack, president of Main Street, bringing you the latest on what's happening in the stock market, and more importantly, what does it mean to you? A couple of you guys say, Ryan, what's going on in the market today? Well, I'm about to give you an update on what it means for Main Street America. So, after the market closed, U.S. stock futures are basically a prediction of where the stock market is headed. It took a major dive. Why? President Trump announced new tariffs, which are extra taxes on goods coming into the country from overseas. The reaction? Man, the market's panicked. Let's break it all down. President Trump announced that starting April 5th, the U.S. will impose a minimum 10% tariff on imports from all countries. But here's the kicker. Some countries like China will face a much higher tariff based upon what the White House calls reciprocal rates. That means if another country has been taxing U.S. goods heavily, we're going to tax them right back big time. For example, the new effective tariff rate for China is said to be 54%. When you add when all the numbers added up, man, that kind of shocked me. It shocked a lot of people. Many traders, and me included, were expecting a cap of 10 to 20%. So this much higher number caught everybody off guard. And so the numbers are falling, the stocks are falling. And why are they falling? Because the stock market does not like surprises, especially ones that can slow down businesses. These new tariffs can mean higher costs for companies that rely on imported goods, more expensive products for consumers, yep, that's you and me, Main Street America, and slower economic growth for businesses starting to cut back. So that's why you saw the U.S. stock futures take a major nosedive. The Dow Jones futures were down at 918 points, 2.2%. S&P futures were down 3.2%, and NASDAQ 100 futures were down 4.1% at one point after the market closed. And then the tech stocks got hit hard. Apple and Nike both down 7% at one point. Tesla was down 6%, and NVIDIA was down 4.5% after the close. And then retailers that rely on heavy on imports, they tanked. Five Below was down 15%. Dollar Tree down 11%. The Gap was down 8.5%. Man, that's crazy. So what does this all mean for Main Street? Let's be real. This isn't just about Wall Street investors losing money. This could hit the real economy in a lot of different ways. So one, higher prices at the store. If companies have to pay more to bring in goods, they'll likely pass those costs on to you and me, Main Street America. Two, job uncertainty. If businesses struggle with higher costs, they may slow down hiring or even cut jobs. Three, market volatility. That's a fancy way of saying more ups and downs in your 401k or your retirement savings. So what's the big picture? Because just yesterday, the stock market had been rising on hopes that Trump wouldn't go this hard on tariffs. Now that he has, fears creeping in about a possible recession. Don't want to bring that R word into it, or at least an economic slowdown. Bottom line, brace yourself. These next few weeks could be rocky, and if you're invested in the market, either through 401k or stocks or mutual funds, man, keep an eye on things. That's it for today, folks. Stay informed, stay smart, and as always, we're going to keep looking out for Main Street, not just Wall Street. I'm Ryan Mack. Catch you next time. Peace.